Harry Markopolos sent a 175-page report to the SEC hoping to claim a huge cash reward through the government whistleblower program. Now, if that name sounds familiar, it's because Harry Markopolos was the whistleblower of the Bernie Madoff Ponzi scheme over 10 years ago now. He literally told the SEC, hey, investigate this guy, here's a fraud, and here's why. He said it took him only 5 minutes to figure out his returns were not realistic and that there was definitely some sort of insider trading or something fishy going on. And what did the SEC do? They didn't do anything. It was only after the last Great Recession that Madoff was finally exposed, despite Markopolos' warning years prior. So anytime this guy opens his mouth, you should take his claims a little seriously. So he claims that his group found a $38 billion worth of accounting fraud happening in General Electric, GE, and their long-term care insurance business. He says they don't fall in line with similar companies in that sector and that GE was basically hiding huge losses from investors by falsifying their regulatory filings, understating their liabilities. And if that wasn't headline news enough, he says that this is bigger than the Enron and WorldCom scandals of the early 2000s. He's also predicting that GE's bankruptcy is right around the corner. So this might all sound bad for GE, but on the contrary, what makes this so interesting is that the management team of GE is vehemently disagreeing and denying all of these claims. And that's not really a surprise here, right? Like GE isn't just going to say, you caught us, Harry, good job. The General Electric is basically, the CEO of GE is basically saying that this is market manipulation and that a simple phone call with him could have answered all of his questions. And he even put his money where his mouth is. We're talking about the CEO of General Electric. He basically bought another $2 million worth of company stock. So that's really putting his money where his mouth is. And that's kind of relieving to a lot of shareholders. Honestly, I work as an accountant, and that's why it's just so hard for me to believe this story. There's so many checks and balances with both internal and external auditors. It would be amazing to me if GE could hide this for so long, because Harry's basically saying that this happened during several different management teams who have run GE in the time period. So, and because of new laws that were passed after Enron, management basically needs to sign off on all of the financials. And if they're not accurate, those people can actually be held criminally responsible for fraud, and they could actually go to jail and serve prison time. So I really have no idea who to believe here. Now, Markopolos also has some sort of incentive in this, because he basically said he's working with an undisclosed hedge fund, and he's betting that GE share price will drop, and he'll receive a portion of those trading profits, which is understandable. He's very open about his life. He's basically says he has a family to feed too, and that he does hope to receive money from this, but he's also saying that he's kind of like a superhero and exposing companies that are doing fraud here. So I really have no idea who to believe. One thing that I do know for sure here, though, is that I personally think that GE is a garbage stock in general. So if we go to the 5-year chart here, it's down 65%. And you can't see this because this only goes for the past 5 years. But if you had invested $1 in 2000, the year 2000 of GE stock, if you had put $1 in there, your value would currently be 28 cents. That's right. You would have lost money in the longest bull market in history. Oh, and that's with the dividends invested. Oh my gosh. GE basically is just a falling knife. Just stay away from this stock. And now I showed you a garbage stock. Now, if you guys want to see some world-renowned stocks, aka my stock portfolio, that's coming up right here. This is another live trading day here. So this past week has just been super. To say it's been volatile would be understatement here. So many days when I was down, many days when I was up, and looks like today we're back to a green day. I will actually upload this on the day that I record it. The last video I made about my dividends, I said that it was a great day in the market when I actually released it. But then that day was one of the 4th worst drop in the Dow history. So let's hope I don't jinx it this time. And just wanted to say that I am, for basically the last 3 months now, I've been doing slightly better than the S&P 500 or the market returns. And that's always great as an investor, because over 90% of investors, probably even higher than that, can't beat the market. So Obviously, it takes a lot of hard work. It takes a lot of controlling your emotions, but glad I am finally starting to do that. Now, the real test will be if I can do this consistently. And what's even better is that I have a higher dividend yield than a lot of these ETFs like VU that just track the S&P 500, and I'm not paying that small expense ratio. So that's always a big positive there, and motivation to keep trying and try to get these returns. So if you guys could keep giving me some love in the comments, really love engaging with all of you guys in there, and be sure to hit that subscribe button. I am working on some more animation videos, so let's keep trying to do this trend of, I keep saying that if we get 15 likes, I'll put out the video this weekend rather than later next week. You guys seem to be crushing those results. Maybe 20 likes, could be stretching it. We'll try again for 15 likes, and I'll release it this weekend. Or if I get 2 new subscribers, I'll also put it out this weekend. That would be an animation video. So last month, down $330. Last week, up barely, actually. I don't even know how I'm up based on how volatile the market's been. And then today, again, a good day. So I'm going to go over the stocks kind of quickly because I don't want this video to be 30 minutes long. We'll be deploying some money in here. And first stock is one that I don't talk about a lot, and that is Equinix here. It's a very expensive stock, $550 almost. Just one share makes up almost 5% of my portfolio. But as you can see here, I'm up huge on this position, 15%, $74. This is basically a cloud computing company. It provides a lot of the infrastructure there, 92% buy rating. It's set up as a REIT, pays a pretty nice dividend yield as well. This stock really has just been doing well over the last couple of years, and it's pretty under the radar here on the YouTube investing community. I'm not sure of too many other people who own this stock. Then we have Starbucks, again, always doing well here. Great returns, $102, 54%. Can't go wrong there with Starbucks. One of the newer positions I have here is Royal Dutch Shell at $55.40, and I am down here just a little bit, and that's because they actually just had their ex-dividend date. So I've already collected a dividend payment from them. May have actually been more beneficial to wait till after this dividend date, and then I could have gotten in at an even lower price and even better starting yield. But hey, I'll take the 94 cents a share. One bad thing about Shell is even though they have a ridiculously high dividend yield, and it's probably very safe for the foreseeable future, is that it hardly ever raises its dividend. It's been stagnant at 94 for a while here. We have 3M here. It's sucked below the 150 mark, which I'm very surprised. This is another stock that's on a very nice discount here, and just definitely don't think it gets the respect that it deserves. We have Intel here at 46.50. Pretty not too volatile here. It's basically been trading around this mark for the last couple of months now. We have Procter & Gamble, one of my better performing stocks here, 52% return, $123 in total return here. Then we have Boeing, which has just been, oh my gosh, this stock just keeps going down and down every time I look at it. Last month it's down $33, almost 10% in the last month. Boeing, of course, has a lot of issues with a lot of its jets. And yeah, I know it just recently settled a lawsuit on how much it's going to be paying out in litigation. But I don't know, guys, this stock, and it's been hit really hard here with these trade wars as well with China. But again, Boeing, one huge positive for them is that they have such a high barrier to entry. The aerospace industry is not very easy to just raise millions of dollars for all the R&D and all the government infrastructure that you have to do when making airplanes and all that complicated business. So really like Boeing for that reason, and that's why I'm going to be sticking with them for the long term. There's not many airplane companies that actually produce airplanes to begin with. Then we have Southern here at 57.50. Pretty good for utilities company. We have United Health, which has just been kind of hovering around this 246 mark. We have AbbVie, kind of just been on the low end of the 60s now ever since it basically announced that it was acquiring the makers of Botox. Very ridiculous starting yield now. I think it's almost close to 7%. Obviously, Robinhood isn't updated here, but I'm down huge on this position. But if I had to start all over again, I would probably want to get in at these prices. 7% yield is pretty good. Then we have JP Morgan Chase. I was surprised how much the stock fell, actually. In the last month here, it's down 5%, but the banks have just been hit really hard here. Then we have FedEx, again, another stock that's really fell. At one point, it was even below 150, so hopefully that stock continues to go up and not down. We have Otter Tails Energy Company here, 5110, and a pretty solid return for me there. And then we have Pepsi. Looks like it's been trending in the upward direction here in the last week here, up $3. Then we have CSX, which has been really hit hard here. They had a pretty bad earnings report, and the stock has really tanked, down almost 17% in the last month. I was, for the vast majority of time of me holding this stock, I was up big on this, but now I am down and 10%, but still going to be holding on to these railroad stocks, CSX, and my other one, Union Pacific. We have Verizon, and then we have Store Capital continuing to rise here. I now have a total return of 22% on this, and it pays a very nice dividend. Love REITs like that. We have Apple. Always glad to see it above the $200 mark because my average cost is only $174. Very safe stock here with Apple. We have Microsoft. If you want to talk about safety, this is probably even better. Microsoft at 7% of my portfolio now and over $200 in return. We have Medical Properties Trust. Maybe you want to add in another position to this as I'm planning on buying some shares today. We have Iron Mountain. Wow, this is maybe the first time I've seen Iron Mountain up in a long time here. Last 3 months down 2%. Last year down 11%. We have ExxonMobil. Now, this is a big buying opportunity, I think, just because gas prices are always so volatile, so they tend to go up and down. I think this is definitely one of its more downward trends here, so maybe a very good buying opportunity. We have Chubb Insurance. Glad to see this making small returns for me, not asking too much of that company. We have MasterCard, one of my more bullish stocks here. Then we have my other railroad stock, Union Pacific. Looks like it's going up today. Looks like all my stocks seem to be going up today. We have Disney. I recently bought another share of this, so now it makes up 3.5% of my portfolio. And down right now, but I don't anticipate being down on this stock for too long. We have Realty Income here, the monthly paying dividend stock. Also, some pretty sick returns on this, 44%. We have Visa, counterpart of MasterCard. Again, very great industry to be in here, $97 in return. Then we have Facebook rounding it out here. Maybe you want to sell this when it reaches the $200 mark and invest in another dividend-paying company. So guys, be sure to hit that like button and subscribe to the channel. Let me know what you guys want to see in the future, and be sure to keep watching my videos.